listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, thanks for joining us for Let's Get Surety today. This is Kat Shamapande, and today I have with me my co-host, Mark McCallum.
Hey Kat, I'm excited to be here and talk to our guests.
Me too. Today we're going to be talking about kind of like what the new normal looks like in our industry. And to do that, we've got two great guests with us. We have Bob Shaw, who's a past NASBP president and president of Skilling Shaw and Associates. Hey, Bob.
Hi, Kat. Hi, Mark.
Thanks for joining us. We also have David Jean, and David Jean is a member of NASBP's CPA advisory group, as well as a principal at Albin, Randall, and Bennett CPAs. Hey, David.
Hi. Great to be here.
Thanks so much, guys. So David, where do you want us to start this conversation off this afternoon talking about? It's a broad topic.
These are definitely unusual times. That's for certain. And, we've certainly been through, a lot of economic uncertainties over the past few years. And obviously, there's always trends that take place and sort of things ebb and flows. But what we're seeing this year is sort of unprecedented. I don't recall ever having to deal with such an unusual thing going on with COVID. And really, Bob, you've certainly been in this industry for a number of years and certainly seen some unusual times. But how is this one different in the surety and the agency world?
Well, David, it really is very unique. It's kind of easy to say, hey, so what's new? Over the last 14 weeks, there's been so many unprecedented events that have occurred. I started in the surety industry in 1979, and we've had some economic ups and downs, and certainly some world events. But this the current situation tied in with a pandemic, which, by the way, I wasn't even all that really familiar with the term pandemic. I mean, epidemic was kind of in the vocabulary, but the first real pandemic situation in 100 years presents a real change or some possible change to the surety industry, which is kind of just skated along in pretty stable. We've had ups and downs, and some years better than others, but certainly nothing of the magnitude of what's occurred over the last 3 months. So with that, it has the potential of presenting some change. And I think that it's just really important that we work with our customers to make sure that everybody's prepared for anything that might come down the road.
Whenever there's you said major event, whether or not it's social, government policy making or economics, there's always sort of that knee-jerk reaction. And what are you seeing? I mean, from a surety perspective, from an underwriting perspective, because obviously there's a lot of uncertainty whether or not we're going to be entering a new recession or what the economic impact is going to be. We don't know yet. I wish I had that crystal ball. But are you seeing a bit of a knee-jerk reaction, or is it more of a let's play this out for a while?
Yeah. So across the board, it's been it appears to be relatively stable. I read a quote from a wealth management company that said that we've damaged the economy like we never have before with all that's gone on, and that's a pretty broad and kind of a scary statement, right?
Yeah, really scary.
So with that, with that, I think it'd be easy for somebody to kind of pull a Chicken Little and say the sky is falling, but I haven't really seen that to date.
So you're not really seeing much changes with respect to the surety underwriting criteria, terms, conditions. Not seeing much in that way at all.
No, nothing dramatic. But I think that's where we as NASBP professionals have to step to the forefront, because there certainly is information that is necessary for the surety companies with what's gone on and some things that they're going to be looking for. And I think it's incumbent on us to be aware of what that might be and to have our customers in the best shape to move forward. It's kind of the plan for the best and prepare for the worst type situation. So the things that I'm seeing are the areas that have popped up in conjunction with the financial ramifications of the COVID situation that the sureties probably have some questions for. One of them might be a lot of our customers were able to take advantage of the payroll protection program. And that's really been kind of a moving target. It appears to have some great benefit for our contractors. So that's good. As most of our customers were considered essential businesses, they worked through the whole process. And the payroll protection program, the PPP, I think was a big assist. So that's a plus, but it also is brand new. I mean, this is a term that nobody in the surety industry, nobody knew or was involved in before. So it's kind of like, all right, so we know what this PPP program is, but how did you take advantage of it, and what's your plan relative to that? I know that's an area, David, that you've been intimately involved in.
Yeah, we have. The terms of the PPP program, and we've been very proactive and really, helping our clients navigate initially through the application process. And it seems like every day go by, the SBA and the Treasury issue more guidance, more interim final rules. The application for the SBA for loan forgiveness now is on its second iteration, and it changes by the day. I think there's been some, fortunately, for businesses, they moved it from an 8 to 24 week covered period. So I think for most contractors, they're really going to really benefit from the program, and I do expect most contractors, quite honestly, to get close to 100% forgiveness. So from an interim standpoint, a lot of construction companies are obviously carrying this loan as a debt. So there's going to be a little bit of leverage there, and hopefully that they can go through the forgiveness process quickly and kind of convert that into income. So there's going to be certainly some balance sheet fluctuations here in the next few months.
Yeah. David, are you seeing your clients keeping the records they need to keep in order to get that forgiveness? Because I know that's a really important piece, is the documentation.
Documentation is very important, and we've been very, again, active in educating our clients in terms of what's needed, what's required, segregating the funds. Be prepared when that time comes to the application process. That it'll be able to go smoothly without getting hung up for, again, lack of documentation, those sort of things. In fact, on our website, we created a workbook really to help contractors through the whole application, all the calculations, all of the very safe harbors that are available out there, so that when they're going through the application process, it will be fluid, and don't anticipate any delays in getting those processed. But and there's other programs out there, certainly the EIDL loan program. There's the Main Street lending program. So there's other support out there, but certainly not as robust as the PPP program. The kind of, if we could perhaps turn the channel here a little bit. We're seeing a lot of, and I know Bob and I have a lot of mutual customers, but we're certainly seeing some project delays, postponements. We've seen some postponements that are, indefinitely, and it's created a bit of a pocket. I've got a number of contractors that are looking for work, this summer, early fall, whereas back a few months ago, they pretty much had a pretty full backlog, and I think for some contractors that are going to be having some challenges here coming up, I think we need to focus on doing some blocking and tackling, really getting back to some financial management basics. Bob, in your world, I mean, what are sort of the things that you're advising to your customers so they can maintain, a strong surety credit, so that when things do hopefully turn, they'll be prepared?
Sure. Well, so in conjunction with the, it's about information and sharing all that you know. And so with the relative to the PPP, I just want to. So one of the things I think is important is that the contractors look at the balance of the year. We have 6 months left in the year or so, and say, okay, let's put together our budget. So we have the third quarter year budget or year-end budget where we anticipate things to be, so that they can factor in things like what the impact of the PPP program has been on the balance sheet, David. I think that's important to the surety companies. They want to know that information. I think that's key. To be able to go through the backlog and identify any projects that may have any kind of COVID impact, where you might have a situation with some equipment that might be held up in a foreign country that was supposed to be delivered. David and I had talked earlier. It's pressure treated lumber is a challenge to come by right now. It's interesting. I had a contractor who said who'd had priced out a project and said, the pressure treated lumber that they had anticipated using was going to be coming from Canada, and there's some challenges getting things across the border from Canada right now. Pressure treated lumber in general is hard to come by, but the U.S. product added significant costs to the project that they were going to move forward with that. So I think that's kind of important. Had another contractor that called up the other day, and they had a project that they bid back in February that they were low on, but now they're having a little bit of a challenge staffing it, because they got some of their employees who are older and are not necessarily keen about being on the project site. They have some health concerns. And so he said to me, well, how do I deal with that?
Yeah.
So it's been a situation where, as being an important advisor to your customer, we've had to. I've got a couple of our good contractor type attorneys in the area have been very busy advising and reviewing contracts relative to this, because, again, I think a lot of the contracts did not necessarily have pandemic specific language.
Yeah, and hopefully those contracts will be getting updated. Hopefully most contractors will update that for that specific language, to provide them some protection. It's one of the things we're seeing, obviously, is we're seeing a fair amount of profit fade. When some of our fiscal year clients were starting to look at WIP schedules, we're really impressing upon them to really reevaluate your cost to complete. Because not only is production going down for obvious reasons, but you got cost escalation costs, you got additional sanitation costs, potential delays, increased general conditions, those sort of things. So I think, really looking at work on hand schedules is really going to be important to, I think, talk with our customers and make sure that, if they're, if they've got some really good, accurate, cost to complete records. So I think there's a little concern I have in getting some of these interim, work on hand schedules. I don't know, Bob, if you're seeing some fades on some of the contracts you're looking at, some schedules.
Yeah, there's definitely some of that that has been impacted. So we're, again, as far as the contract is concerned, I think being clear and concise, providing good update information to the surety is good. One of the things, ironically, I think that probably has been a plus here is, as we've talked over the last several years, one of the biggest challenges for all contractors has been getting adequate labor. So while we have our contractors had fair backlogs, most of the people, I don't believe, were in a situation where they were overextended. So they'd been kind of, I think a lot of people had been kind of waiting for the next shoe to drop. And while I don't think anybody anticipated there was going to be this large of a boot that was going to be dropped, I think that they were probably in better shape. The rose-colored glasses weren't jammed on too tightly. So the ability to adjust and work with the situation has been very good. I think that the contractors have felt pretty good about that. Mm-hmm. And fortunately, in our part of the world, have not seen a lot of work that has fallen off the table. So that has been good. Although I would anticipate that amongst some of the private schools and that sort of thing in the area, that they're all looking at their capital expenditure budgets right now. So that's something to pay attention to as we move forward.
Yeah.
You kind of mentioned private. We're seeing, particularly with a lot of the postponements and cancellations, I'm seeing it primarily on the private side, and I think with some of our contractors, they're very concerned that there'll continue to be sort of a decline in some of the available private work. And I've got contractors saying, "Geez, I really haven't been in the public world for a little while because we've had so much work. We've been negotiated a lot of the private work. And all of a sudden, I think we're going to have to start looking at public work, and we haven't had a bond for years." So, do you anticipate some of your customers that perhaps have been maybe a little quiet on bond requests now perhaps are coming back to the marketplace?
Yeah, that's a very, very good point, David. Yes, absolutely. It's been interesting to watch because again, it is such an unknown. A lot of contractors have kind of taken the attitude of, well, you know what? I think we're going to bid on most things that come by because we're not sure if all work's going to be awarded. We're not sure what may or may not transpire on some of our current work. So yes, we're seeing a longer bond list, like you said, the situations where there was some public work that may not have been as attractive to a lot of contractors. They're taking a serious look at it. Ironically, I'm wondering if this may present some opportunities for us also as surety people, because you may have some private owners who in the past might have, not required a bond because of the cost of a bond, or say, hey, you know what, maybe I might want to pay attention to this now because again, they're a little bit unsure as to what's happening in the financial world, and that same thought process might apply to subcontractors. So I think as we move forward, we should be cognizant of that, and again, make sure everybody's prepared for opportunities. And the part of that does again, having information being key is because your contractor may be looking at a lot more work. They may start to push backlog as far as the surety is concerned, as far with outstanding bids, not necessarily hard work that's on the books, but they may want to take advantage of some various bids that are popping up, and so that might necessitate a little bit of activity that way.
Hey, Bob, do you think along those lines, do you think financing lenders may now be more attuned to thinking about having bond requirements as a condition of financing?
That's a great point, Mark. I would hope so. I mean, again, they certainly are seeing this firsthand, and they're not sure what the outcome is going to be relative to all the payroll protection program and the other issues that are out there. These are the folks that know that a lot of these contractors who may have depended on some local work. The various budgets of a lot of municipalities are a little bit under fire right now, and so I think I think it's a good opportunity for us as surety professionals to make everybody aware of the value of a surety bond and what it does for the owner and the lender in this whole process.
It's such a good point. It really, these uncertain times really highlight the value of not only the bond producer, but also the surety product.
That's exactly correct.
You had mentioned, Bob, that labor had been an issue, but then also that some contractors had been working fairly leanly. Do Do you see any more focus on reducing overhead expenses by contractors now?
I think that yes. I think that everybody is paying very close attention to that right now because they're very sensitive to the next year or so. I mean, as we said, I think people have been waiting for the shoe to drop. We've had such a great period of economic prosperity, wondering when things were going to slow down, and so the brakes got hit really pretty hard with us. Although, again, it's kind of interesting, Mark. As my good friend James LaRue from Little Rock, Arkansas says, what is our job? And our job is to predict the future. And Jim will say at the NASBP Bond School, he looks out at the class and he says, and how do we predict the future? And somebody will raise their hand and they'll go, well, we predict it based on past history and what's transpired. And so, we go forward that way. And the thing that's a little bit of a challenge is, again, this economic situation is different than different than the last Great Recession. I mean, you have the stock market still performing relatively well, but you have at the same point in time you have a number of retailers and other businesses that have filed for bankruptcy. So contractors that may have done work for these people may have been in the retail sector. Everybody's kind of, I think, reevaluating what their priorities have been and how their operations are set up, and will operate conservatively on a moving forward basis.
And with that in mind, what we've seen time and time again in times of good economic prosperity, right? There's that sense of complacency. Contractors, particularly heavy contractors, obviously very tax motivated, building up their fleet, adding to the fleet, expanding facilities, contractors hiring more people, more technology. And when things are good, everybody can sort of tolerate some excess capacity or some fat, so to speak. And I think that for some contractors, they've really got to be very much in tune to that, because if things do start to get soft, they're really going to have to be very proactive in managing those costs and making those difficult decisions early, not 6 months or 12 months later, because we all know, working capital can liquidate quite quickly. And I just want to know your thoughts that I think there's that tendency to delay those difficult decisions, and so I just want to get your thoughts on that.
Yeah, so I think that you're absolutely correct. What it kind of comes down to, David, is with in the surety world, as we've said, it's the basic building blocks, right? Working capital, liquidity, the equity base, and leverage. And if somebody over the last handful of years has not been able to put their business in a good place relative to those areas, I think that they could have some real challenges moving forward. And I think I would anticipate that'd be the spot where some surety companies may get more concerned, because again, with the next couple of years having some unknowns, I think we're going to have to proceed a little bit more cautiously. So I think again, to be able to have good information, as you said, the work in progress detail, to have the top of the line internal accounting capabilities, to have contract knowledgeable CPAs and attorneys as part of your team. I think those are the kind of things that are going to provide the comfortability for the surety companies to continue to provide credit, adequate credit, and maybe to expand programs and that sort of thing as they move forward also.
Mm-hmm. Hey, David, do you think that CPAs are being more proactive about reaching out and starting those communications with their clients, knowing that there really is, quote, new normal going on, or there's no normal in new normal. What are you doing in that regard?
We've been treating this really with a tremendous sense of urgency, and we've been very active reaching out to our clients. Certainly, we're providing almost a daily blog in terms of what's changing. The different government programs, all the tax law changes that have taken effect with CARES Act. What are the pending changes? Giving everybody, keeping everybody alert to what's out there, to those changes. And really, we talked a lot about blocking and tackling, and it's really preparing people that look, I don't want to be sort of Debbie Downer, but we want to be realistic in terms of what this impact could be. And there's a tail to this, because a lot of our contractors are still working off backlog pre-COVID. So there's a lot of concern is that once we run off this backlog, what's going to be available come fall or winter, and it's really starting to have those conversations in terms of what are you doing to prepare, what are your contingency plans, and so forth. So and this is really a good opportunity for businesses. I think one good thing that's come out of it is I think a lot of contractors are really reevaluating their business model and looking forward and saying, how can we survive during these difficult times or during these turbulent times? And how can we come out of this stronger than we were before? So this is a really great opportunity to kind of reevaluate what your business model is, and really, how do you want to position yourself in the future?
Wow. So if I'll first start with you, David, and then turn to Bob, but if you had to hazard a prediction of what will be a permanent change as a result of going through the COVID-19 situation, once, God help us, it is passed, what would you say would be that permanent change?
I think more of it's going to be reliant on technology. Obviously, we're using, anywhere from Zoom, GoToMeeting, virtual conferencing, remote work location. So I think how we interact with our customers and how we interact with our fellow employees, with our vendors, I think there's going to be a higher reliance on technology. And I think it's just something that we need to embrace and to adapt.
Great. Bob, what do you see as going to be the one sticking change as a result of us going through this period?
Well, so I agree with what David said. And the other thing that'll be interesting, Mark, is, a lot of people in our industry, in the surety industry, that have been only in place for 10 years, this will be the first real challenge that they face. So some of the younger and newer surety people, this is going to be, it's really easy to provide surety programs and be a popular person when the world's right side up. But when it starts to get a little bit upside down, it becomes a little bit more of a challenge. So I think it'll be good as part of the educational process, and it's something we have to go through. One of my a bit of a pet peeve, though. I got it. So it's kind of interesting. So David mentioned, it's going with the technology. We've all become kind of like, I call it Zoomies, right? The whole Zoom product, and it's pretty cool. During this whole process, I've done Zoom meetings with the people in my office and that sort of thing. We're all back together now. But it was one of the things that we can't lose sight of is that surety is a relationship business, and that we provide credit guarantees. And it was kind of interesting. I was talking to my to my son Ben, who's in the business, and I said to him, we were talking about so and so. Somebody wanted to have a Zoom meeting, and Ben said, "Bullshit." Now I'm probably not supposed to say that, so I'm sorry, but and I said, "Well, what do you mean?" He goes, "You've been telling me that you have to be able to look at somebody while you're talking about certain things, and that you can't." He said, "You can't just do this over a iPhone or over a computer or something like that." He says, "If that's the case," he said, "then why doesn't your customer just do business with somebody from across the country?" And And I think that's, I thought about that for a minute. And I said, you're absolutely correct. I mean, what we do, we provide an unsecured credit product. And I think that it's really important that we know our customers well, and that our customers, contractors, and that the surety companies do too, because one of the taglines we've always said that, it's always good to put a face with a name, and it's important to know who you're providing surety bonds for. So I think that it's important that we don't just become complacent and become too reliant on that part of technology, that it still is a people business. And we just need to be clear on that. I think that the technology that's available to our customers right now to help them do their planning and provide information and analyze the detail that they give us is very important, and it's important for them to do business with people that understand their industry.
Great.
Well, thanks so much, David and Bob. It was great chatting with you both today. I just want to remind everyone, if you want more information on what's going on around COVID in our industry, you can take a look at NASBP's website. We do have a COVID-19 resource page there for you. We'll have to have you both back again. It was great chatting with you.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.